All right. So after the quiz, how are we doing this week? Ready for the week to be over? Yeah, I don't know. I see some grimaces and chagrins from the few people in there right now saying, "Okay, yeah, I didn't like that quiz, Dr. Barnes. Don't do that again." But apparently, we had the easier quiz from between the audit track and the tax track. I heard the tax track got a rough quiz. Was that true, McKenna? Yeah. Okay. Yeah. I guess the question is which one would you rather have? Rather have this quiz or Dr. Caden's quiz? Okay. All right. So just don't chagrin me. You know how good you got it in here. Yeah. So I apologize for missing on Wednesday. I told you all on in class yesterday for forensics that I literally cannot talk for like more than 2 minutes on Wednesday, and I said probably not going to go well for an hour-long lecture. So hopefully the video is not too onerous. I don't like doing that because I know the videos are effectively the same content, and this one was actually a lot shorter than the content that we would have gone through in class, but I don't think it's as easy to grasp when you don't have that information there. That being said, I did think about would it be great? I'm a little bit unhappy because I'm going to have to count that as a vacation day, even though I was working all day in my office. But I thought about it. Could I actually take vacation days for the remainder of my Wednesdays here at Truman State? And I did the math. And the answer is I only have enough for like the next 3 years. But you know, I could like feasibly take a Wednesday off here and there and still be fine. Then have to avoid Wednesdays altogether. But today's not a Wednesday; it's a Friday, and Friday means CPA prep. So let's get into it. Let's start talking about some of the things we need to go into detail. Oh, before we know, before we get into this, I want to remind you all that I would like to get the groups formed for the semester research projects. Start thinking about that sooner rather than later. We're at week 6, which means we're over a third of the way through the semester. So soon we're going to be over halfway through the semester. That's just 2 weeks away. So I'd like to make sure that we have those groups formed and some project ideas sussed out by then. So again, if you have preferences for who you want to be in a group with, let me know. They asked me if I would let the 6-person supergroup that tried to invade my auditing class be a 6-person supergroup. The answer is no. You're gonna have to split up again. Okay, if that goes in my evaluation, so be it. All right, but yeah, unfortunately, 6 people is just a little bit too large for a group for a 14-person class. So yeah, it's gonna be 3 groups, 4, 5, and 5. That's kind of what we're setting it for. So start thinking about that about group people that you want to be in groups with. All right, here we go. Analytical procedure to start out with. Of the following non-financial information, what would an auditor most likely consider performing analytical procedures during the planning phase audit? Now, this question is not particularly difficult if you think about the concept of analytical procedures. So remember, analytical procedures is going to be ratio analysis, trend analysis, or developing expectations, or some combination of those. So we'd want to have a non-financial piece of information that could be used in the context of one of those particular items. So could we actually use this to develop an expectation? Could we use this to develop trend analysis? Something along those lines. So turnover personnel in the accounting department, is that something we generally pair with financial information to develop expectations or ratios or trends? Not really, okay. What about the objectivity of the audit committee members? How do you measure objectivity? I know academics like to do stuff like that, but if you're doing an audit as an audit team, would you be able to measure that? Not really. Square footage of selling space. All right, here we have an interesting one. Is this something that is measurable? Is it something that we could use to develop an expectation, like sales per square foot of selling space? Yes. So this is likely our answer, but let's look at the last one. Management's plans to repurchase stock. That's not really quantifiable. So I think C is probably the best answer, just in terms of its utility in that regard. An effective internal control system may be compromised by all the following except. Now, this is a little bit of a dicey question. I don't like the wording on this. I wish they'd been a little bit more specific. To me, this question reflects of what is going to be a limitation of a good control system, because it actually says an effective internal control system, but an effective control system may fail for what reasons? Now, there's 2 possibilities. One, it could be an inherent limitation of internal control system. And everybody remembers the inherent limitations of internal control, right? I can't be the only one in the room. I'm the only one in the room, aren't I? Okay, so let's reflect back on those inherent limitations, okay? Inherent limitations, management override of controls, errors and mistakes, and collusion. Those are the 3 inherent limitations. Other possibility is the situation of controls changes. Basically, the risks change and the controls are no longer relevant. They're good, but they don't address the risk that they don't address the risk that exists anymore. So those are 2 possibilities that we could have. So let's go through the answers. The application of fewer 20 principles. Is that one of the answers that we just talked about? No. So this is likely our answer to the question because we're just saying everything except, but let's look at the rest of the answers. External events that cannot be controlled by the entity. What is the scenario that we need to do when things change outside of the entity? What is that step called that addresses something like that? So we have 5 components of internal control, control environment, entities, risk assessment, control activities, information communication. And what's the last one? Real slow on the uptake today. Again, AYCD, I'm guessing. All right. So yeah. What is that last one? It's monitoring. Monitoring. What is the purpose of monitoring? Monitoring is addressing risks that exist within our controls and updating them to address the new risks. Okay. So this would be a monitoring mechanism. But again, that was one of those things I talked about. Things have changed. So the risks that the controls address are no longer being addressed, or I guess I should say, the risks that exist are no longer being addressed by the controls. So that would be something that would render an effective control system ineffective, okay, or compromise it. Management collusion is subsequent override of established controls. That's 2 of them. That's override and collusion right there. Inevitable human errors, that's the other one, okay? So all of those, all the last 3 are things that we talked about. The only one we didn't talk about is application of fewer principles. By the way, we didn't talk about this back when we talked about COSO. And again, I knew everybody loved COSO because when I said the last one on COSO, everybody yelled out in unison monitoring. Okay. But how many principles are associated with those components? Does anybody remember that? We talked about it very briefly. It's actually 17 principles. So application of 20 principles wouldn't even be relevant because there's not 20 principles to apply in this situation. It's only 17. Manual controls would most likely be more suitable than automated controls for which of the following. So we have manual controls and automated controls. And what's the difference? An automated control is done automatically by our accounting information system. What is the most likely scenario where we're going to use an automated control? We have something that periodically takes place automatically. All right. Periodically takes place automatically, or not even periodically. Periodically is probably a bad word. Consistently takes place automatically. So if we're talking about a manual control, we're probably talking about something that's not something that is going to be a constant flow of information. It's going to be something that's inconsistent. It could be periodic, but it would be something that doesn't occur very frequently. So on large, unusual, non-recurring transactions, we have our first option, and I think that's our best option. Does everybody agree with me on this one? You better be nodding your head because that's the right answer, but let's make sure that we look at the rest of the answers. High volume transactions will require additional calculations, all right? High volume is kind of the key that this is something that occurs pretty consistently. Situation with routine errors that can be predicted and corrected. That's something a system can do easily if it's something that's predictable. Circumstances that require a high degree of accuracy. What's going to be more accurate, humans or machines? It's like, well, AI, hallucination, Dr. Barnes. AI can't be trusted. Okay, they put 6 fingers on artwork. You're like, no. If you ignore kind of outside things like that, our systems are going to be much more effective with respect to accuracy than human beings are. So A is kind of our answer for all those reasons we talked about. All right, I don't like the wording on this next one. So it says in assessing control risk, and I think that the wording should have been in testing controls. All right. Now, the reason why it's a little bit misleading is, are we actually in risk assessment or are we in controls testing? And the way that this question is answered, it leads me to believe that they're actually referring specifically to controls testing. But if you answer the wrong answer, you can make a judgment call and say, okay, I think I was right if I interpret a certain way. So the wording on this is really bad. But let's assume that we're talking about assessing control, which we're in test of controls now. We're in test of controls. Ordinary selection for variety techniques, including what? So the way that they answer this question is, which of these are test of controls? So inquiry, is that a test of controls? You better believe it. It certainly is. Okay. And what about analytical procedures? How many analytical procedures did you all work on for your test of controls on Monday and Wednesday? 0, big 0. Analytical procedures are not test of controls. They are not test of controls. Now, the reason I made the caveat about why the wording is so weird is that we're in risk assessment. Analytical procedures can be used during risk assessment. So this would be a correct answer if you answered it from the perspective of, I'm assessing risk, and that includes my assessment of control risk. And if you were thinking along those lines, kudos to you. You get a gold star. Okay, I'm taking the gold star away because you didn't say monitoring, but I'm going to give you the gold star back. Okay, so reperformance and observations. Reperformance a test of controls? Yes, it is. An observation of test of controls? Yes, it is. And that's our answer, by the way. Comparison and confirmation. Comparison, I don't know what that is, but confirmation is never a test of controls. Never a test of controls. Inspection and verification. Inspection could be, but verification, again, don't know what that is. That's not really a legitimate test. By the way, if you see a type of evidence that you don't recognize, is it possible that it's correct? Yes, but I would ignore it in most situations. So comparison, verification, those are completely made up, and I would just ignore them altogether. When there are numerous property equipment transactions during the year, an auditor who plans to assess control risk at a low level usually performs what? So here's an interesting question. We're talking about assessment of control risk, which again, in this context, we're talking about test of controls. And then we got to try to determine what is it we're going to do with respect to property equipment. So if we're talking about assessing control risk at a low level, does that mean we do or do not have to perform a test of controls? So we're saying assessing risk at a low level, we're saying it's something lower than high. We are required to test internal controls, all right? That's the case. Because we're saying we want to make sure that controls are effective, we have to test them to make sure they are effective. So if that's the case, then test of controls have to be included. So we can ignore B and D. By the way, you can ignore B and D naturally because you notice it says analytical procedures. What did we just say about analytical procedures and test of controls? No such thing. Okay, analytical procedures do not exist for test of controls. The question then is, if we do test of controls and test of property equipment balances, are they going to be extensive test of property equipment balances or a limited test of current year property equipment transactions? That's an interesting question. So we see the words numerous property equipment transactions during the year. So obviously it's got to be extensive test of property equipment balances at the end of the year, right? No, okay, that's not how we test property and equipment. Remember, property equipment is tested using roll forwards, where we say, we know what the beginning balance is. Let's test everything that changed during the year and that restrict our testing to that. So it's going to be limited test of current year property equipment transactions. So C is our answer. Which of the following conditions or events would most likely would cause an auditor to have substantial doubt about an entity's ability to continue as a going concern? All right. So this term going concern, is being a going concern a good thing or a bad thing? It's a good thing. I really want to remain a going concern for quite a while. Okay. I hope you all do too. What about substantial doubt about entity's ability to continue going as a concern? Is that a good thing or a bad thing? That's a bad thing. We're worried that they will not be in business a year from now. That's basically how you translate that. So which of these is a signal that they might not be in business a year from now? Significant related party transactions are pervasive. Now, let's answer this question two ways, okay? Are significant related party transactions a cause for concern? Yes, they are. Are they a cause for concern specifically related to substantial doubt about an entity's ability to continue as a going concern? No, okay? Not really. They're more about business operations and the sanctity of those, not necessarily about their ability to maintain a business. They could be a signal, but it's not directly related. Usual trade credit from suppliers is denied. Yeah, that's a real problem right there. It's like, okay, we want to go do accounts receivable or generate payables for transactions, and the suppliers say, yeah, we're not going to extend credit to you. You got to pay us for cash up front. That's usually a signal that something's going on, that they're a little bit antsy about the company's ability to pay. By the way, there's an interesting story behind this question. Not this question directly, but something I tell my students. So my brother, I told you he's a caterer. He used to actually work in restaurants, and he worked for a very unscrupulous company that was about to go bankrupt. And what did his boss tell him to do right before they went bankrupt? He said, all right, reach out to all suppliers, buy as much goods as you can, and then we're just not going to pay them. They legitimately told him that because they were getting ready to declare bankruptcy. Now, brother, being a good character, and I can't believe him saying nice things about you, bro. All right. But my brother, being a person of good character, said, no, I don't want to burn these bridges in case we do recover from this. Said, I'm not going to do that. And he didn't remain with that company much longer after that. But yeah, that was kind of a really, really curious thing to do, a really, really shady thing to do. Usual trade credit from suppliers denied being our answer there. What about arrearages and preferred stock dividends are paid? We know that's not the correct answer, but why is this not a signal of substantial doubt? So what's an arrearage? That means when you owe something and you have owed it for a while, that you actually pay up your debt, okay? So dividends, preferred stock dividends are owed, but they hadn't been paid for a very long time. Now we're actually catching up. Is that a signal of health or weakness? It's a signal of health when you actually catch up on dividends. Restrictions on disposable and principal assets are present. That's just good business protocol. That's just making sure that principal assets not be discarded or disposed, okay? Which of the following factors most likely would cause the CPA to accept or not to accept a new audit engagement? So this is an interesting question. So which of these things would restrict the scope of the engagement sufficient that you would say, I don't think I can do my job properly? The prospective client's unwillingness for inquiry of its legal counsel. So, all right, we'd like to talk to your legal counsel to understand a little bit about the nature of operations. No, we don't want you to do that. What would you say as a CPA in that situation? Say, well, if I can't talk to the dirty lawyer, then I don't want to do the job. Okay. But you have to use the dirty lawyer word. Okay. You have to actually say those words. Actually, I'm going to say that and somebody's going to take me seriously one day and they're going to be working an audit engagement and say, yeah, if we can't talk to the dirty lawyer. So what'd you call them? Yeah. Like, oh, sorry, Dr. Barnes' words in my mouth again. The inability of the client to review the predecessor's audit or working papers. Now, is this something we'd like to do? Yeah, absolutely. Is it a game or deal breaker if we can't do it? So it's certainly something we'd like to do, but the predecessor may say, I'm sorry, I'm not willing to let you have that information. We can still do the engagement. It just means a lot more work on our part. CPA is lack of understanding of the prospective client's operations industry. So you don't understand the industry. So can you basically not do the engagement then? Well, no, you can take the engagement and then gain an understanding of the operations and industry. So that would be a great answer. Indications management non-investigated employees in key positions for a hiring. Okay. So that's not really a deal breaker, but that would that increase risks in certain areas with the engagement? Certainly. Okay. It's something we need to be aware of. We want to know about that because that may actually increase risk in certain procedures that we enter. Which of the following procedures would provide the most reliable audit evidence? All right. So what was our acronym that we learned back in 417 that I reminded you of in this class? The vowels of the alphabet, A, E, I, O, U. Okay. Auditor-generated evidence is the most reliable. What types of evidence is that? That's going to be inspection of tangible assets, reperformance, recalculation. All right, then external evidence. This is where we get information outside of the entity. So that a good example of that would be confirmations or any documents that were generated externally. Internally generated evidence is I. Okay, that's client-generated evidence. That would be analytic procedures, inspection of records and documents internally. And then O is oral evidence, observation, and inquiry are kind of the good examples of that. They almost always require corroboration. Don't even say almost, just say always require corroboration. All right. And then what is U? You know it. All right. I can't believe I can say that without cringing now. That's just really, really bad. I've been doing this so long. So AEIO and then U kind of. All right. Inquiry is the client's audit staff held in private. So inquiry we know is the lowest level. That's O. It's oral evidence. Inspection of pre-numbered client purchase orders in the file of the vouchers payable department. That is internally generated evidence. That's going to be I, which is a little bit higher. Analytical procedures form of the auditor of ending trial balance. So that's going to be something that was generated by our entity. So it's I. Inspection of bank statements obtained directly from the client's financial institution. That is E. Okay. It's not quite as high as A, but it's still higher than all the rest. So D is our answer. D is E, which D and E are our answer. That's basically where I was going to go with that. All right. So now, we have some questions about testing. Now, I do want to make a quick note about this. Hopefully you were not confused by this because if you looked at these, you may have looked at these and say, all right, it looks like they're doing tracing. And tracing is a test of, I'll give you a hint. It's either completeness or existence occurrence. I'll give you a hint. It's not the one that's used up here. Completeness. Remember, vouching is pointing down, which is a directional test from top to bottom. Okay. So that's how we think about existence occurrence. Tracing, when we use it correctly, is a test moving from bottom to top. That's a test of completeness. Now, you may have looked at this and say, the word trace is being used here. Is this actually a test of existence accuracy? Well, first of all, you kind of ignore that because that was not the context of the question. But the answer is, if they used it correctly, they would be using this. This would not be a test of existence accuracy. So it probably implies that they did not use it correctly. I've alluded to this previously. That's the book is, or the CPA exam, especially Becker. They may not use the word trace properly. You do have to make sure you understand the context of the term being used because it's not always going to be Dr. Barnes' reliability where it's like trace means specifically completeness. If it's in my context, it will always mean completeness. If it's Becker, hit or miss. So all the times they use trace here, which is funny, they use it 3 different times for existence and accuracy. And then they have completeness actually down here, but they don't use the word trace. Ignoring that, make sure you always are consistent about how you actually look at the words and make sure that you understand the direction that's being moved, because that's the key, not the word that's being used, but the direction of the test. But assuming that this is used correctly, which we can actually make some arguments for that, what we're trying to look into is we're trying to look at, based on this reconciliation testing we did, that we get all the information we need. So down the way. Here we go. All right, so let's go ahead and read through. So we had to answer three questions. Was sufficient audit appropriate evidence obtained? And the answer to this is pretty easy. Yes or no. Then we have to justify what it is. Was there any issue with audit evidence or work paper preparation? So we're going to validate what's going on here. And then what additional test work, if any, is required to include on the audit procedure? So looking at this, obtain standard bank confirmations for all bank accounts, trace the bank balances to find confirmation of bank reconciliation, investigate any exceptions noted. So we've got our cash lead sheet here, which we're going to probably not refer too much to. This is just kind of our validation of what it is that we're testing. And the bank reconciliation refers back to this to understand what we're testing. Now, remember the bank reconciliation testing, we're trying to determine, based on what we know the bank balance is from our confirmation, can we identify the cash balances reported by the client and what the differences are? Can we actually validate the differences? Because what we're trying to get to is the balance for the general ledger. This is information we can verify through a confirmation, and then anything that's adjusting entry, we should be able to test and make sure those are correct. So if this is correct and this is correct, what does this mean about this right here? It should be correct as well. All right. Now, our first point of contact here is the bank statement. And so what do we get the information from the bank statement on? It says balance for the bank statement. How do we verify that the bank statement balance is correct? What would be the entity we'd want to reach out to verify that the bank statement is correct?
The bank.
The bank. All right. So the bank is a third party, meaning we're going to send them what? Confirmation. So let's take a look at this confirmation. It's pretty good. There's definitely nothing suspicious about this confirmation at all, is there? Just nod your heads if you're not certain what I'm going through. Just nod your head. You can always gas trap. There's obviously nothing suspicious, is there? Nope, nothing suspicious. Nothing suspicious at all. When Dr. Barnes says something like that, it must mean there's something suspicious. What is suspicious about this document? Audit staff note. Bank confirmation was received directly from the bank. Okay, good. All right. But is this our only confirmation? No. Okay. So we got another audit staff note on our second confirmation with savings account. Response received from email from G. Kim Controller Lot Incorporated. Ooh, those are two different receipt points. Okay. So which do we want to receive? Directly from the bank, or do we want to receive this from our client? From the bank. Why do we insist on receiving this directly from the bank? Well, it's externally generated evidence, but more importantly, if we receive it from the client, if we receive a bank document from the client, can the client manipulate it? Yes. Remember Wirecard? Yeah, this kind of stuff going on there. Yeah, we don't want to rely on our client to do stuff like that. So it's certainly problematic. So was there sufficient audit evidence obtained? The answer to this one is no. Say no. What's the problem? Bank confirmation from the savings account. Our savings account was received directly from the client. What do we need to do? Have the bank send the confirmation directly to the auditor. Pretty straightforward on that one. All right, trace deposits in the bank reconciliation to subsequent period bank activity. All right, again, ignoring the word trace, was sufficient appropriate evidence obtained on this one? Yeah, we're good on this one. We're good on this one. All right, so no issues noted. And no additional audit work was required. I'm just getting this one out of the way because it's unfortunately not as easy for the rest of these. All right. Trace outstanding checks in the bank reconciliation to the subsequent bank period activity. So let's take a look. Bank reconciliation. We take a look at the checks. Now, what are we trying to do? So it says traced from the subsequent period bank activity. What did we call that back in 417? Does anybody remember what we called this document? This was our cutoff bank statement. That was basically the item that we requested after the bank reconciliation to determine all these items that should have cleared actually did clear. And it looks like all these items did clear, didn't they? We have an A, an A, and an A. How many A's should we have? How many do we have? One item did not clear. Okay. Is that a problem? Because they're saying this is a transaction that should have cleared. And once we receive the subsequent varied bank statement, our cutoff bank statement, it did not clear. So we probably want to say, look, we don't know what's going on with this $8,500 check. We're not happy. So one outstanding check did not clear in the operations checking account subsequent period bank activity. What do we want to do? Well, we just need to make sure that we understand what was the nature of this transaction. So we're going to review the underlying documentation to determine whether this outstanding check is a valid reconciling item. Is this something that should have been included in the bank reconciliation? Is this something that was a valid reconciling item? The answer may be no. We may go back and say this never should have been included on the reconciliation in the first place. If it isn't a reconciling item, do we still have questions? Say yes. Why is this check not cleared? Well, we don't know. Whoever was sent it out to decided not to deposit it. They wanted to just take an $8,500 check and put it in a frame on their door, okay? Because some people have that money to do that. But other than that, just we're trying to determine what is the nature of this check and why it has not yet cleared, because it should have cleared by now. Okay. So scanning the subsequent bank activities, significant unusual items, your understanding, explanation, reviewing supporting documentation, all such transactions, ensuring the items included on the bank reconciliation are appropriate. Now, that's a lot of words, but what does this really mean? Well, let's go ahead and look at the bank reconciliation. So if we look at the check numbers, we've got outstanding checks from the range of 94 to 103. Now, what can we say about check numbers? What is the characteristic of check numbers that's very important to us as auditors? They are sequential, which means that anything after 103 should have been probably, in order to, I should say this way, in order for it to appear as a year 5 item, it should be a number after 103. Now, not necessarily 104, because there's a lot of space between December 18th and the year end. But at the very least, it had to be later than 103. Anything that occurred before 103 should properly be in year 4. Can we all agree to that? So let's go ahead and take a look at our subsequent period bank activity. We've got all these transactions that are listed here that occurred during year 5. But if we go down here, the very last transaction is a check for year 5. That's number 95. Now, based on what we just said, when should this item be related to? What year? Year 4 or year 5? Year 4, because it falls right after 94, but before 103. So it should be in here. But you'll notice that according to the subsequent period bank activity, this did not clear until year 5. What does that tell you about its presence in the bank reconciliation? It should be up here, and it's not. All right. So do we as auditors have a problem with this? Yes, there's not sufficient appropriate audit evidence obtained. What are we going to look at? We're going to say a significant check clearing the operations of cloud. What was the not included in the outstanding check listing? And then what do we need to do? Well, we need to understand what's going on here. Is this right? I can't see those. Significant thing. Significant transaction from management. Significant on the clearing on the operation checking account, subsequent period bank activity that do not appear in the reconciliation. Oh, so do not appear. So it's the next one. My apologies. There we go. So we need to understand this $32,000 check. It's obviously something that's related to year 4. Why is it in year 4? Why is it in the reconciliation? Okay, why is it in the reconciliation? Is it possible that there could have been a break in the sequential activity? It shouldn't happen, but is it possible that it could have happened? Could somebody have just kind of like misplaced the check and meant to write it, and then they found it behind the cabinet and says, oh, here's the check. I'm going to go ahead and write it now in year 5. That would be really embarrassing to admit, but that's something that happens. There's actually stories behind that I won't really get into, but yeah. So we want to know, why did the sequence get broken, and should this be a valid year 4 item or a valid year 5 item? We need to understand that. It's going to be the key to detail. So how did this go? Did everybody feel pretty comfortable with this? Let's see some. Okay. All right. Let's go ahead and take a look at what our questions for today are. All right. I know I didn't give you much time for this, so if you didn't finish, you'll write up. That's okay. But I do want to make sure we have time. All right. Which of the following type of evidence from auditor most likely to examine to determine whether controls are operating as designed? Now, I did not write this question, but I could understand if you think that I did this, because I definitely picked this question just to troll you all. All right. So confirmations of receivables, verified account balances. What do you know about confirmations and test of controls? They can never be used to test of controls. Letters of representation corroborating for pricing. Who are we getting letters of representations from? Probably from the vendors. That's a third party. What do we call a third party request? A confirmation. Confirmations are never used to test of controls. Attorneys' responses to auditors' inquiries. Attorneys, there's the third parties. What do we call third party requests? Confirmations. What do we know about confirmations? They can never be used to test of controls. Everybody see where I'm going with this? Yes. Client's record documenting use of EDP programs. So this is the only one that's inspection records and documents, and therefore the only one that's correct. So that's our answer. Auditor believes that there is substantial doubt about the remaining ability to continue as a going concern for a reasonable period of time, and evaluating its plans to deal with the adverse effects of future conditions and events, auditors most likely would consider as a mitigating factor that its plans to do what? So we didn't talk specifically about this, but again, this is one of those questions that if you think about it just logically, it makes sense. Okay. So remember, auditor has to evaluate whether there's substantial doubt. Their second step is if substantial doubt exists, they have to talk to the client to understand what their plans are. All right. Now, the third step is to say if substantial doubt still exists, they have to disclose this. But what's involved in that second step? Well, obviously, we want to make sure that the client knows that there's substantial doubt about their ability to continue as a going concern, and they are addressing this to try to fix the problem. So if they are trying to address this problem, we're looking for something that's going to be a mitigating factor, something that would alleviate this substantial doubt, looking for something that will improve their financial position. That's basically what this question is telling you. All you're looking for is something that it's like, this is a good idea. This is a good plan for you to follow. So repurchase the entity stock at a price below its book value. Is that a good idea? No, it's not really a good idea. It's a bad idea. Okay. Probably don't want to be spending excess cash on repurchasing stock. That's not going to help the company. Issue stock options to key executives. Yeah, that's a good idea. You're having financial disruption. Let's just go ahead and give the people in charge better valuation. All right. Lease rather than purchase operating facilities. All right. What do we know about leasing versus purchasing? Which is it more or less costly in most situations? It's usually less costly because they're going to be giving it back. So there's definitely benefits to both, but leasing in the short term is definitely a much more viable financial option. Does that sound like a good idea if you're suffering financial difficulty? Yes. Okay. That's our answer. Accelerate the due date of an existing mortgage. So basically, the people that we have our mortgages through, we're going to accelerate the due date, meaning our financial burden is going to be increased substantially. Yeah, not a really good idea if we're talking about that. So there's only one that represents an ease of stress. That's going to be C. All right. Have a good weekend. See you all on Monday.